What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 13, April 26, 2023. We made some trades today, so let's get into it. So coming into today's session, my goal was to be patient enough to wait for my best opportunities. I know that if I can wait for my best A+ setups and trade them the right way, in line with the direction of the trend that the market is currently in, I increased my probabilities of success dramatically. So that was my main focus for today. So before we get into the analysis, let's talk about our important levels on the chart. So this pink line represents yesterday's closing price, which was 33,556, and that'll play an important role later on in today's session. So let's talk about what happened leading up into the market open at 9:30. So we initially had a bull channel that extended from the pre-market, which started at about a price of 690 at 8 o'clock, and we hit a high of 750, which was the top of the channel right here. Now notice how before the market opened, we had a strong sell-off, very strong sell-off, and then once the market opened, we had a very strong move back to the upside to retest the top of the channel and this price area that was established in the pre-market. So whenever you see a strong move to the downside and then an immediately strong move and equal move back to the upside and then another move back down, that tells you that the probabilities of a consolidation zone being established increase by a lot. And that's because you had both parties in the market showing the strength. So you had sellers show that they had strength in the market, but you also had buyers come back and show the same thing. So now it becomes a push and pull back and forth to see which side of the market will be in control going out throughout the rest of the session. So that's what leads to consolidation zones, and that's exactly what happened in today's session. So the zone got established once prices came back off of the top of the channel, sold off to retest that opening price for the 9:30 market open today. So we came back up to the top of the zone and back to the bottom. So whenever I see a consolidation zone, first I want to identify which direction prices were moving before the zone got established. So in this scenario, we were moving down with a strong spike and then a consolidation occurred. So that tells me that I only want to short this consolidation zone. So when I short a consolidation zone, I only want to short it from the top or at an area that's very close to the top once prices moved away from the top of the consolidation. So that's my plan going into this consolidation, and that led me to trade one. So I went short when prices retested the top of the consolidation zone and my break-even stop got hit. So for me, that's just following my textbook trading plan. Identify the direction, which was down, which tells me that I only need to go short towards the top, and I did so here. Only thing was, prices were not able to move down to the bottom of the zone immediately. They eventually did, but not on this trade that I took right here, and they came back to break even. But when I saw that prices moved away from the top of the zone again, I entered in at trade number 2. So let's read the trade notes. I entered back into the short trade when prices reached the top of the zone again, and then I exited at the bottom of the zone. So for me, that's just my textbook way of trading consolidation zones. Identify the direction, trade in line with that direction from the best prices, and then exit your trade when you get back down to either the bottom of the zone if you're in a short or to the top of the zone if you're in the long. So because we were short right here, we exited at the top of the zone and we took profits. So after a consolidation zone is formed, one of the most popular things that can happen is a breakout. Now breakouts have two ways that they can possibly go. They can either be successful or it can be a breakout failure. So in order to determine what a successful breakout is, you want to see prices come back and retest the bottom of the consolidation after they broke out. And that's exactly what we had happen in today's session. So we came back to establish a swing high where we tested the bottom of the consolidation zone right here. We pushed back down, consolidated a little bit, and then we had this spike to the downside on this candle. Look at how long this wick was. So that showed what the seller's intentions were and what they were trying to do throughout the rest of the session, and it was just only a matter of time before they were able to do that. But look at where they were able to close at on that candle despite all of that selling. They closed right on this support level. So that tells us that this area is very important and is acting as a level of support for right now. So then we see prices come back from the bottom of this wick all the way back up to retest the top of the zone. So all that momentum that they had from around 33,600 that pushed them all the way back up to the top of the zone at 660. Despite all of that momentum, nothing but selling occurred when they got back up to the top of the zone. And on these next three candles, we see long tail candle wicks, which tells us that the buying strength is kind of running out and the momentum is starting to fall apart. So that right there pretty much constitutes the second retest of the breakout. We had the first, it was able to move away from the bottom of the zone. We had the second retest and it was able to move away from the bottom of the zone again, and that's pretty much where we went into a selling free fall. And this is actually one of my favorite patterns. I call it a continuous bear spike. So this happens when almost all of the candles within a certain period of time are all red, which tells us that sellers are in control. Now notice how we don't have too many multi-candle pullbacks. All of the candles are red, so there won't be any green pullbacks that are completely obvious. But this is actually one of the setups that I like to break down and study a lot. So let's go to our database and let's break down these continuous bear spikes and explain what they are and how they actually work in the market. So like I said before, all of the candles, or the majority of them, all have to be red in a continuous bear spike, which shows you that the sellers are in control. So let's look at, what's a good example? Okay, let's look at a move like this one. So notice how if you look at it from first glance, it just looks like prices had a continuous spike to the downside with no obviously clear pullbacks. But if you take a detailed look at each one of these candles, notice how even though all of them were red and at one point had a bigger body, none of them closed on the lows for the candle. So if you look at this candle, they established a low but made a wick and closed within the middle of the candle. Same thing on this one. They made a wick but pushed up and closed within the mid range of that candle. Same scenario on the next one, this one, and this one. So every single last one of these candles had wicks. So in scenarios where you have a spike like this, you probably won't get a multi-candle pullback that establishes a clear swing high. Instead, the pullback is going to happen within that candle. So they'll push down, create a low for that candle, push back up, and close off of the lows. And that would be the pullback opportunity for each one of these candles. So notice how you had 1, 2, 3, 4, 5, 6 opportunities and 6 different chances to get in on a pullback before prices really just had 3 big bars to the downside with almost little to no wicks, and then the move was over. So that's how a continuous bear spike usually works. It's not a clearly obvious pullback. The pullbacks happen within the specific candle. So that's what I was looking at today when I saw this bear spike happen. So I was just waiting for my opportunity, and once I saw this little pullback right here, this was the best that we could get. I saw that prices came back to the top of the channel. They pulled back down once again and then came to the top of the channel once more. So once I got that second touch of the top of the channel, that's when I went short. And I think that's a good trade because you had 2 different groups of sellers getting into the market at the same time. You had people like me that were getting in because prices broke a specific level at 600 and you were expecting them to go to the 575 level, and there was also a continuous bear spike. But then you also have people that were going into the market with short entries because we had touched the top of the channel once and 2 times back to back after we had what was pretty much the best, I guess you could call this a pullback right here. This was the best pullback that happened within this bear spike, but even then there were no green candles. So you had people going short for a multitude of reasons, which just increases the probabilities of that trade being successful. So once I saw prices get back down to my scalp target 20 points below, which also happened to be the low for the day, that's when I exited my trade and took profits, and I called it a day. So overall, I would say today I think I followed my plan very well. On trades 1 and 2, I saw a consolidation zone, I identified it, and I traded it the proper way. I waited for the breakout test to be successful after it broke out, and then once that was confirmed, I waited for my entries and I got into the short trade at the best possible prices that I could within another chart pattern that I recognized, which was the continuous bear spike. So on all three trades, I could check the box that said I did follow my plan. So that's a good day for me, and I want to continue being able to do this going forward. And I think the goal for that and the biggest thing is to be able to be patient. If I can be patient, I can pretty much control my destiny in the markets, I believe, because it's so many opportunities throughout the day, and it was like 10 trades within this one first hour that I could have taken, but I was disciplined enough to be patient and only take the ones that I was really sure about, because I've studied those and I'm very confident in how they move and the right way to trade them. So I think going forward, that's what I have to focus on, being patient. Today was a good day, but now that it's over, it's all about continuing to practice and go hard. So in tonight's back testing session, the goal is be patient enough to wait for my best setups. So I appreciate you guys for tuning in with me today. It's day 13. I'll be back tomorrow at 9:30 a.m. sharp for day number 14. And until then, take it easy.